Hi, Wes Scott from Kane and Scott, and today we're going to talk about tax consequences of debt settlement. One of the biggest problems that I think people face when they have an overwhelming debt problem, and they want to avoid bankruptcy like we all do, right? But the problem that you run into is even if you can settle the debt, you end up with what we call a tax liability. And the way that works is this. If I start a business and I get an investor to lend me $1 million, and then the business goes south and there's literally nothing left. I mean, there's just nothing. And I still owe the investor $1 million. And the investor says, you know what? I'm an older person. I don't care about money. I'm filthy rich. And I'm going to forgive this. I'm just going to wipe it out. Well, that's wonderful. That's absolutely fantastic, right? But then you're going to pay taxes on that $1 million because the IRS sees that as income to you. And what'll happen is when the person goes to file their taxes, they're going to write that $1 million off as a loss, right? They're not going to want to pay taxes on it. They're going to write it off as a loss. And when they write it off as a loss, that's going to generate a 1099 income to you, and your accountant's going to go, holy moly, you owe, $350,000 in taxes. And if you take that same debt and you file a bankruptcy on it, there's no tax liability on it. Because under under the IRS rules as to what defines income, debt that's forgiven as a result of a Title 11 bankruptcy, which Chapter 7 and 13 fall under, is not income to you. It's not taxable. See the difference? When the time is right. When you are ready to get your life back, reach out to Kane and Scott. You're going to be so thankful you did.